I'm a partner at Fidelity Growth Partners, which is a global investment firm. We have about $1.5 billion under management, focusing on fast-growing technology companies around the world. And we have a team of 7 people here in Europe. Latest fund was 100 million pounds, and we are focused on effectively Series B growth stage companies. Some of the companies you might have heard of are companies like Not on the High Street, Wahanda, InnoGames, Kurum Software, Colt Telecom, and a few others. So what I wanted to talk about today is a fundamental issue that we have had with European venture capital technology landscape for a long time. Just a show of hands, how many people think that European venture capital landscape has enough money? Okay. And how many people think that Europe lags US in capabilities? Right, so pretty expected. So we have embarked on some research trying to understand exactly what is the outlook for European tech entrepreneurs and what is the outlook for European venture capital. And I'm here today to tell you that we're very excited and that we think that we are heading into kind of a renaissance for European venture capital and tech entrepreneurship. The first point is that there is no Silicon Valley in Europe, and there won't be for a long time to come. So if you look at the US venture capital landscape, it's about $20 to $25 billion of capital deployed per year. Europe is about 1/5 of that size. And Europe is very distributed across UK, Ireland, France, Nordics, Germany, Eastern Europe. So it is a highly fragmented market, and there really is no Silicon Valley. So what has happened in 2008, but it's a trend that's been happening since the early 2000s, is that the European venture capital market not just is small, but it's also been shrinking. So since 2008, there's probably been about 10 billion, up to 2008, there's been about $10 billion raised per year in the European venture capital. And since 2008, after the credit crunch, that has been about halved. So it's about 5 billion per year. Meanwhile, deployment has still happened at a reasonably similar pace. So what's happened in the last 5 years is that we have actually seen shrinkage of the European venture capital market. Funds, very well-known funds like Atlas Ventures are no longer present here in Europe. And that's probably what some of you guys are feeling right now. If you have a startup and you can get some, there is some capital, but doesn't really feel abundant. So the question is, what could happen in this market that would change that? So one of the things that we have started to analyze is what's been happening in the last couple of years. And starting in 2013 in Europe, we are seeing some very interesting trends. But these are the trends that also started happening in the US a couple of years ago. So as we mentioned, US raises about $20 to $25 million of capital per year. But in the last 2 years, they have returned over 100 billion of capital to the investors. So effectively, in short 2 years, they've returned what is maybe 4 or 5 years of funds raised. So US has had a very strong run. I mean, think about companies. It's Facebook, it's Zynga, it's Groupon, and it's many others. And that trend hasn't stopped. It has actually continued. So if you look at 2013, the IPO market in the US has been very strong. In contrast, the European market has actually been relatively slow. Probably in cumulative terms, in 2011 and 12, there has been a little bit less than 20 billion returned. Certainly you can feel that, actually it's even less than that. It's about 15 billion or so. So significantly less and significantly less compared to the US. And that's what you guys have been feeling. It's not necessarily just hard to find capital, but it's also hard to sell your companies. However, again, in 2013, we have seen some trends. We have seen some billion-dollar exits. So recently, we have seen Supercell being sold to a Japanese company for 3.1 billion. Not a full sale, but nevertheless a sale. Trivago, a German company, was sold for $1 billion. Again, not a full sale, but majority sale. And then we have seen some pretty big transactions. Neolane, which was a French company that was sold for $800 million. Ubiquisys, which was sold to Cisco for $310 million. So we certainly feel like the M&A market in Europe has been picking up in this year. Part of it is probably that the Eurozone crisis is happening, is less visible, and probably people feel more bullish about Europe. But one thing that has always been an issue for European companies over the last decade, that has been the absence of the IPO market. And you have seen now the European government, especially the British government, focusing on this. But if you look at the performance of IPOs in the US, I counted over 30 IPOs in the US in tech alone in 2013. Companies like Viva Systems, which is now a $4.5 billion healthcare IT software company. A company like FireEye, which is a security software company, over $4 billion. But the list continues. And one of the things that's been staggering this year, and why people are talking about the potential bubble, is that these companies have now traded up 60% in the after IPO market. So the US is open for business, and some of the best European companies that have business in Europe, in the US, are going public in the US. So recently we have seen Criteo list. It's a French company now listed for, I think, something like $1.6 billion. Recently IPO'd. Wix, which is an Israeli software business for small to medium businesses, I think is listing in the next week or two. And then there's a significant pipeline of other companies that are rumored to be going public in the next 12 to 24 months. The other exciting thing is not all of them are going to go to the US. We actually now, for the first time in Europe, have companies that are big enough and profitable enough they can go public on the London Stock Exchange. So if you look at companies like Just Eat, Wonga, Zalando, these are all being discussed at being over $1 billion in valuation, and shortly, they probably are going to. Some of them might list in the US again. But our estimate is that Europe probably has a pipeline of about $20 billion worth of IPOs in the next 12 to 24 months. So again, just trying to think about what does this mean for the ecosystem. If 50% of these companies are owned by the VCs, that's probably going to result in about $10 billion being returned to the investors. Now, this is in a market, again, where people are raising between 4 and 5 billion per year. It's going to be a significant contributor to the investment firms that exist in this market, but also, and maybe more importantly, the entrepreneurs who are running these companies are going to have significant windfalls that are going to then enable them to become angel investors, to start new companies, and so on and so forth. So we're seeing, a significant amount of capital that is likely to be returned in the next 12 to 24 months. We don't necessarily see this as a bubble. I mean, some of these companies are really big. I mean, if you look at Zoopla, if you look at, we have now probably over 15 companies in the European landscape that are over $1 billion in valuation. Many of them are actually, highly profitable companies like Zoopla, companies like Supercell, companies like Zalando, who is now profitable. But the list is significant. So if we look at that from a macro perspective, it seems to me like when we look at the number of startups in the European market, there's about 4,000 startups and more. There's about 50 plus incubators and accelerators now. I mean, it's one of the biggest trends, and it isn't just in the tech city. It's in Berlin, it's in Stockholm, it's in Copenhagen, it's in Berlin, it's in Hamburg, and so on and so forth. 50% of European entrepreneurs in VC portfolio companies are now repeat entrepreneurs. So we actually have a quantum of people who have done this before. So the entrepreneurs are maturing. And finally, we have a very strong cluster of competencies. So in terms of the markets that we are very strong in, we have a couple of largest gaming companies in the world. King.com, which is a UK-based business, is probably, with the Candy Crush Saga, the largest global franchise in gaming online. Supercell we mentioned. If you look at Jagex, or if you look at German companies like Wuga, InnoGames, there is at least 3 clusters of very strong gaming across Finland, UK, and Germany. E-commerce, UK has the largest online penetration of e-commerce, over 14%, coming up to 15%. So companies like ASOS are starting to export that knowledge internationally. And then finally, things like media. Here in Soho, we have a number of companies that are, whether it's Criteo in France, but more importantly, there are a number of agencies that have been able to expand internationally. Grapple Mobile is one of them that just acquired by Monetize, and there are a number of others. So, in summary, I feel like the drought in European venture capital, I think, is coming to an end. Certainly, foregoing some shocks, we are, bound to make a lot of money. The VCs are about to make a lot of money. Entrepreneurs are about to make a lot of money. And that's going to be great for everybody else in this room. And I'm certainly hopeful that the next 10 years will be very different from the last 10 years. Thank you.
And experience this for yourself. For more information, visit our website, firsttuesday.org.uk. Don't network, be the network.
From GlassFit, which have just